Good afternoon and welcome to the September 25th edition of Office Hours presented by the Maryland Center for Collegiate Financial Wellness. My name is Dr. Tisa Silver Kennedy, and I'm the founder and executive director of the center, and I thank you so much for joining me here today. For those of you that are in Maryland, you know it is raining and humid and all of the things that make this not an ideal day for hitting the streets. So I'm glad that I'm actually inside and able to join you for office hours today. So before we get into the questions that have come from our community, I just wanted to give you a quick overview of the center, and then I've got a quick disclaimer, a couple of updates, and then we'll get straight to the questions. So let's take a look at the vision. The Maryland Center for Collegiate Financial Wellness was founded in 2021, and we have quite an ambitious vision for borrowers in the state of Maryland. And this is that, well, actually not for borrowers, excuse me, for college and career school students in the state of Maryland. And that's that they will be able to achieve these 6 pillars of collegiate financial wellness. Those are being creditworthy, ready, resilient, empowered, successful, and thriving. If you'd like to know more about the center and our mission, vision, and ways to support, you can visit us online at mccfw.org. Again, that's mccfw.org. All right, now we've got a quick disclaimer that I must provide, and that is that office hours is presented for informational purposes only. The information that you're receiving today does not constitute personalized legal or financial advice. We do our best to give you the most up-to-date information possible, but there are a lot of moving parts and everyone's situation is different. So you want to make sure that you take inventory of your loans. Also, ask yourself some questions about your preferences, your budget, household circumstances, and review all of your options before you make any decisions regarding your student loan repayment strategy. All right, now that that's out of the way, I can go ahead and give you a few updates. People are still asking us about SAVE, and of course, SAVE is the acronym for Saving on a Valuable Education, which is an income-driven repayment plan that was launched by the Biden administration in July 2023. SAVE is still on hold, as are all other income-driven repayment plans right now, and that's due to a lawsuit which has resulted so far in a federal injunction. So if you've gone to studentaid.gov and you're looking to recertify your income for an income-driven repayment plan, or to apply for an income-driven repayment plan, or to consolidate your loans, you'll see that those applications are not available. The buttons that are usually blue, I believe, are grayed out. You're not alone in that. They're not processing any applications for income-driven repayment or consolidation right now. We know the paper applications are out there, but we have not heard about those applications moving forward because of this injunction. So as soon as we have any changes to report, we will make sure that we share them with you. But it's looking like we might not get a solution to this lawsuit until early next summer. So again, once we have updates, we'll be sure to let you know. But for now, the applications are down, and there's really nothing that anyone can do to advance their applications for income-driven repayment or consolidation, at least not online. I did want to give a positive update, and that is to one of our office hours viewers, Tammy G out in California. I just wanted to thank Tammy for watching office hours first, but second, thank you for coming back to us, not once, but twice, to keep us posted on your journey with PSLF. So Tammy had left a comment a while ago that was just basically thanking us for office hours and saying she'd been able to use the information and was waiting to find out about PSLF and hopeful, because the math was definitely on her side. And the latest update we got was actually yesterday, which says, "You are a godsend. I don't even live in Maryland, but the Lord led me to this channel." Just found out from consolidating under the IDR waiver and under PSLF that I had $53,000 forgiven. And the comment is cut off on my phone, but I believe it says something to the effect of, "Thank you for your willingness to share this information so freely." So to Tammy, congratulations. We're so glad that PSLF worked for you. And we're just really excited about the possibilities that have opened up for you now that that debt has been removed from your shoulders. So congratulations. Thank you for tuning into Office Hours. Please do, tell other people about it, and I hope that they're able to use the information as well. But this experience just highlights how important it is for people to, one, seek out reliable sources of information, two, apply the information to their own situations where it's beneficial, but three, to come back and report these successful outcomes. Because when we do this broadcast, we don't know how many people we're reaching exactly. We don't know how many people use the information, but we keep on hosting these editions anyway, because we know that when one person is able to have, that kind of success, or to use the information to their benefit, then that's a win for all of us. So congratulations to Tammy, and thank you so much for taking that critical step for us in providing the feedback and that successful outcome. We're super happy to hear it. All right, so let's move on to the first question for today's edition of Office Hours. And the question is, I submitted my form in June indicating that I'd be at 120. So this is about public service loan forgiveness. It all depends on whether they count January and February. If they count, I'm at 121. Should I submit another form? This is a popular question. A lot of people want to know if submitting a new form is going to speed up the process. So let's take a look at a bit of the background for this borrower and the answer. So this borrower was placed into an administrative forbearance. That is a pause that is not of the borrower's choosing, typically. So the administrative forbearance means that payments are not due at this time. The question here is about the months of January and February in particular. Right now, this person has shared that MOHELA was not counting those months, but the representative, according to this borrower, the representative has shared with them that that was a mistake and the 2 months should count. So if those months do not count, the person will have 119 qualifying payments, and that's just one shy of what it takes to gain approval for public service loan forgiveness. They also made payments in July and August, so that would put them over the 120 requirement anyway. Previously, they were told not to submit a new verification for the final 2 months because that could delay things further. So let's take a look at the answer. Just wanted to provide a place for everyone to go to find their updated payment counts, because things have changed. We went from MOHELA.com to MOHELA.studentaid.gov, and the PSLF information moved away from MOHELA's platform and directly into studentaid.gov. So the best place to go to get your updated payment count is studentaid.gov. Once you make it past all of the two-step verifications and questions about your communications preferences, all of that, you're going to come to a place called the dashboard. And if you scroll down a bit on the dashboard, on the right-hand side, you're going to see a list of quick links, and then you should see an option to track your PSLF progress. When you go to that tracking screen, I want you to look for the notation that shares when your employment was last certified. So if you submitted a form, the date that it certifies your employment up to should be listed within that PSLF progress section. Just keep in mind, the Department of Education paused processing on PSLF applications for the months of May, June, and that pause even extended into mid-July. And from my own personal experience logging in yesterday, it showed that my PSLF payment count and employment has not been updated since April. And I submitted a form. I can't even remember if it must have been June, but I think I submitted a form during the pause. My account has not been updated yet. So they're still working through the backlog. So our advice is just to exercise some patience, because 2.5 months is a long time to shut this processing system down. And they're still working through a lot of applications that were submitted before the break and during the break. We have heard before that submitting duplicate forms can cause delays. We have seen duplicate forms cause delays many times. Sometimes those delays can be 3 to 6 months. However, I just want to remind everyone that we are in a new processing kind of age, because we went from MOHELA.com again to MOHELA.studentaid.gov, and now to straight studentaid.gov when it comes to finding out details about your PSLF applications. So a lot of what's happening right now it's new to all of us. So we're not sure how much extra time would be added if you submit a duplicate form. But based on what we've seen before, that does tend to cause delays. One note of comfort, though, is that any payments that you have made above and beyond the 120 qualifying payments needed to gain approval for PSLF, those extra payments will be evaluated for refund after your PSLF application has been reviewed. So if it turns out that you're at 121, or if you made a payment this month in September and that puts you at 122, if they come back and say you have 122 qualifying payments as of this month, then the extra 2 would eventually be refunded to you because you overpaid. So for this borrower, I say congratulations in advance. I hope it all works out for you sooner rather than later. All right, let's move to our next question. Okay, does anyone know if payments made during this time will count once the forbearance is over? So this question is referring to the forbearance that has been basically placed on loans for borrowers who are enrolled in SAVE. That was something that borrowers did not have. They did not initiate, did not have a say in the matter. This came about as a result of that federal injunction. So let's take a look at the answer. All right. The current period of forbearance, this is again the forbearance that's related to SAVE, does not count toward PSLF. So if you're thinking about making payments during this time, it's not something that would benefit your PSLF progress. It would not make you, get there any faster. However, we know that when loans are in forbearance, payment is going to be expected eventually. So if you can, take the amount that you would have been paying each month had the loans been in repayment instead of in this current forbearance, and save that money. Set it aside somewhere so that once repayment resumes, you're able to make your payments. But also, if this does go out, to a place that's beyond your 120th month, then you could explore what's called the PSLF buyback option. The buyback option would allow you to pay for periods of forbearance as if the loans had not been in forbearance. And the way that that calculation is made, from what we've seen, is that there would be a formula to determine how much you would have paid had you been enrolled in an income-driven repayment plan at the time that the payments were due. So using that figure, they'll let you know the lump sum that you need to pay to bring your qualifying payments up to 120. And we don't want you to be in a situation where, let's say the loans are in forbearance for a year and you pursue the buyback and they tell you what the amount is that you need to pay and you can't afford to make it. So the alternative that we're suggesting is save the amount of money that you would have been paying for these loans had they been in repayment right now instead of in the forbearance. I think that's a safe alternative. They can still keep you on track, hopefully, to meet 120 qualifying payments at the time when you originally expected to. All right, let's move on to the next question. All right, this question is, I have been in residency for 2 years, but my payments have been $0. Does this mean that I don't get any credit for the past 2 years? I consolidated in October of 2022. What should I do now? So this question has to do with a borrower who is pursuing public service loan forgiveness, but is in a medical residency. So let's take a look at the answer to get some more context and provide the answer. Excuse me for one moment while I sip. All right, so for this borrower, we have a question to ask, which is, have you already submitted a PSLF application? Because if you have not submitted one, then we don't know how many qualifying payments you have. And by submitting a PSLF application, you would be able to know for sure if the time during your residency counts as qualifying employment. If the time during the residency counts as qualifying employment, then those $0 payments could count toward public service loan forgiveness, provided that the $0 payment was one that was authorized by the Department of Education through an income-driven repayment plan. So this borrower mentioned that they had consolidated back in 2022. And in the application, at least the online application for consolidation, there is also an application for income-driven repayment plans. And because you're in residency, it's quite possible that based on your income, you could have qualified for a $0 monthly payment. And $0 monthly payments that are assigned by an IDR plan can count toward public service loan forgiveness, even though you're not paying anything. So if you were in repayment and you were working for a qualifying employer, then the payment should count toward PSLF. Just a quick reminder here about enrollment, because we're not sure if this residency included more than half-time enrollment. In the case of more than half-time enrollment, the loans probably would have been sent into an in-school deferment, and time during in-school deferments does not count toward PSLF. But repayment typically begins 6 months after you complete your program, or if you drop out or enroll in less than 6 credits, usually per semester. So if your loans were in an in-school status, the months would not count toward PSLF. So we just need to know a little bit more information about the terms of the residency and whether you've already submitted a PSLF application. If you have not done so, please do submit one so that we can get more answers and hopefully get a qualifying payment count that sets you on track for PSLF. All right, let's go to the next question. Okay, this question is, how do I see what repayment plan I am on? I can't see anywhere obvious that says which payment plan I'm on. And this is a great question. I know that some people think, well, how could you not know what repayment plan you're on? This can be a very confusing space, especially with the injunction and the recent servicing platform transition and the shifting from servicers prior to that transition and the on-ramp and the return to repayment last year. Like, with all of these different things floating around, especially the platform changes, the things that we were used to looking at to find out, what repayment plan a person is enrolled in or how many loans they have altogether, that looks different. So it's okay if you don't know what repayment plan you're in, because the information has been shuffled around. You might have applied for one and the application didn't go through. Like, I'm in that situation. So it's a toss-up, but we want to show you where to go to find out officially what repayment plan you are in. So let's take a look at the answer. All right. Little background first. The payment has not changed since 2019. This borrower did not voluntarily switch to SAVE. They do not think their loans were automatically switched to the SAVE plan. Their loans are not in forbearance, and they have 4 payments left before reaching 120. So they are really close to PSLF. This is a very interesting case because the loan should have been moved to the forbearance if the borrower was enrolled in SAVE, but they could be enrolled in another income-driven repayment plan. The fact that the payment has not changed since 2019 would be strange under normal circumstances, but you have to remember, we're coming out of, a 3+ year payment pause related to the pandemic. We've had all these transitions, the limited waiver, the IDR adjustment, all of these things that have affected the time when a person is required to recertify their income. So it sounds like this person is probably enrolled in an income-driven repayment plan, just hasn't had to recertify their income for a while, and they need to make sure they reach that 120. So now let's take a look at the answer and find out where they can go to find their repayment plan. So you can find your repayment plan in a couple of places. You can either go to your servicer's website or you can go to studentaid.gov. To see your repayment plan on the Student Aid website, you want to log in to studentaid.gov, go through all the 2-step verification and communication preferences prompts. And once you get to the dashboard, if you scroll down a little bit underneath the FAFSA image, you should see a button that says View Details. If you click on the View Details and then scroll down to the loan breakdown, you're going to see a list that is categorized by servicer. So you might see 6 items on that list, but 5 of them have a 0 balance. That's because they're providing you with the breakdown of every loan you've ever taken out from the federal government. So what you want to do is scroll to the servicer on the list that actually has a dollar amount listed, because that lets you know that the loan is still outstanding and you still have to pay it. So when you click View Loans, Then you'll be able to see the date of the loan, the status of the loan, the repayment plan that the loan is enrolled in, as well as the interest rate. So go to studentaid.gov, take a look. And also, if you want extra confirmation, go to your servicer's website. You should be able to see it there. All right, let's go to the next question. All right. Hi, I'm planning on uploading a paper income recertification form shortly. I was just wondering if anyone has clarity. If the Department of Education decides to push back income recertification, let's say another year, will I be able to effectively cancel my paper application? This is a great question because going back to that federal injunction, the online applications for income-driven repayment plans, that application has been disabled, but the paper application is still accessible online. So some people are downloading the paper application and sending it to their servicers. And to be quite honest, we are not sure about what's happening with those paper applications. Some people have come back and said that they've been told the application is not going to be processed anyway, so there's no point in submitting it. And some people have also said that their servicers representatives had told them go ahead and submit the form. So what we do know is that you can submit a paper form. What we don't know is what will happen to that form after you submit it. And that includes that form being evaluated, as well as your ability to cancel the form after you've already submitted it. So let's take a look at a bit more background and then the concrete answer. All right, so the process of recertifying for an income-driven repayment plan means that you have to provide information or give the Department of Education permission to obtain that information about your household and your income. And for most people, the assumption is that over time, your income is going to rise, at least for some periods. So for this particular borrower, if they recertify, their monthly payment is going to increase by a significant amount. And if you're in a situation like that, then there's really not a lot of incentive to recertify. You want to make sure that under normal circumstances, you do recertify on time so that you're not, hit with any, penalties that might make the debt increase even more. So I totally get why this person does not want to recertify right now, because you don't want to be on the hook for a larger payment if you don't have to be. Outside of income-driven repayment plans, they don't want to be placed in the standard plan, which can sometimes be a consequence of not recertifying on a timely basis. So let's go to the answer. So I mentioned this before, but the processing of paper forms is uncertain. Some people are going ahead and sending them in, and we'll rely on them to let us know what happens with those applications in the coming months. What we have been advising people to do is to wait to recertify, just because right now we don't know if the paper form is going to go anywhere. So if you want to complete the paper form and send it in, then by all means go ahead. That's a personal choice. But it seems to us that there will be more certainty around processing once the online application has been restored. Due to the current legal issues, including that injunction that has basically placed all IDR plans, or at least the recertification and applying for that part of IDR plans, have been placed on hold. It sounds to me like you don't need to recertify right now, because the application, at least the online version, is unavailable, so there would be nothing to process. So unless there is, the servicer is telling you you need to recertify right now and providing the space for you to do that online, I think that you would probably prefer to leave things the way that they are. And I don't know, or I have not seen any cases where a person didn't recertify during this injunction and they were switched to the standard plan. Keep in mind that all of this is just as new to us as it is to you. So we will continue to be in touch with people who are in IDR plans and wondering what to do, perhaps submitting a paper application versus those who are just waiting and not doing anything. We will definitely keep you posted on what we hear. And but in your situation, it just sounds like being patient, not submitting anything is probably the way to go, because anything you submit probably will not be processed. All right, let's move on to the next question. All right. The next question is, does anyone know how to escalate at MOHELA? Okay. If you've been watching Office Hours all this time, you know that MOHELA is a federal student loan servicer, and they used to be the only servicer that was responsible for the public service loan forgiveness program. So we have fielded a lot of questions about how to, ask the right questions when you reach out to them, how to have your concerns perhaps escalated to a supervisor or whatever else. I will say that in general, it's important to learn how to advocate for yourself. And if you have repeatedly reached out in good faith to get a solution to an issue that you're having, and you find that that solution is not coming, you definitely need to go above, and that could be internally in the servicer's company or externally by using some of the resources, government resources, to advocate for yourself. So let's take a look at the background before we give an answer for this question. All right, so this borrower is looking for documentation of their payments before and after the servicing platform switch. They need to have their name, and they also need to have the servicer's name on letterhead. Some representatives from the servicer have reportedly told this borrower that this is not something that they can produce, and others have promised to send it in a day or two, and then they haven't. This person has escalated the issue internally to a supervisor, and still nothing has happened. The reason that they need this information in the format that they've listed is so that their state does not recapture a $1,000 tax credit at the end of the year. Any tips? So the first thing I'll say is, it's a good thing you have till the end of the year, because that gives you some more time to find a way to get this information. Let's start to look at the answers so that we can try to help you get the information that you need for this issue. So the first thing I wanted to do was go back to the old platform, MOHELA.com, to see if there was any way to access payment history, because some of the older servicing platforms, we actually saw that there was a document center where they produced tax documents and payment histories. And so I just wanted to verify that this was no longer available on MOHELA.com, and I was able to verify that. Once I was able to log in, it referred me to the new servicing platform, which was mohela.studentaid.gov, and none of the tabs that I used before to get information on, payments, PSLF, the tabs that were remaining, none of them worked. They just took me back to a login screen. So mohela.studentaid.gov is the place to go. If you log in and go to payments and billing and then click account history, you're going to be given a search prompt where you can enter the date range, and you can go all the way up to the life of the loan. This for me was somewhat useful because it went back as far as the disbursement history. So I could see when my loans were dispersed. I could see when I made payments after my loans were transferred to MOHELA. What I could not see was the payments that were made to the prior servicer, because my loans were with Nelnet before. Can't get in on Nelnet either. So if your servicer changed, the life of the loan function might not show you everything that you need to see. And even with that letter, even with the search query, it did not produce a letter. There was a printable page where you might have been able to have the logo on that page, but there was no letterhead. This was just, on the website, pulled the payment history, and it came back as a list. So what we would recommend is to reach out to the State of Maryland Student Loan Ombudsman's office. The Student Loan Ombudsman is there to help with issues like this, where the borrower has reached out on multiple occasions, is not able to get a resolution. So please do reach out to the Student Loan Ombudsman. They are online through the state's Department of Labor, and perhaps they can assist you with getting the records from your servicer. I'm not sure how quickly, the servicers can provide the letterhead, but I do know that this is something that old servicer platforms have the capability to produce. And if you are in the state of Maryland, then this is something that you need if you have successfully applied for and received the student loan debt relief tax credit, because you have to document that you made payments that are at least equal to the amount of the tax credit you received. And if you don't provide that proof within a certain number of years, then the tax credit can be, they use what's called a clawback to basically take it back from you. It's not a, as far as I know, it's not a withdrawal from your bank account, but it would be the next time you file your taxes, that tax credit would basically be reversed. So you would owe it to the state because you did not meet their burden of proof for showing that you took the tax credit before and used it to pay down your student loans as the rules of that program dictate. So great question. Please reach out to the State of Maryland Student Loan Ombudsman, and I hope that they're able to help you get the information that you need to hold on to that tax credit. All right, let's move on to the next question. Okay, that question is, I just completed grad school and I'm starting at a nonprofit. Was trying to get all of my ducks in a row for PSLF. My undergraduate loans are already under IDR, but the website is showing that my direct grad loans are not eligible for IDR, which is contrary to what I believed they would be. The question is, do I need to consolidate these, or is there some error since I'm still in a grace period? All right, let's take a look at the answer, which may include a bit more background on this. Usually what happens with repayment is that a payment is not due until after the grace period ends. And if you've never used your grace period before, then the grace period is typically 6 months. Since you are a recent student, your loan should be eligible for an income-driven repayment plan. Which income-driven repayment plan your loans are eligible for may vary. Unfortunately, when it comes to all income-driven repayment plans right now, the online application is unavailable. So what we would recommend is for you to stay in touch with your servicer about what options are available. This is going to be a really inconvenient space for the class of 2024, because the application for IDR is no longer there, nor is the application for consolidation. And income-driven repayment plans for most people provide a more affordable option than the 10-year standard plan. So just hang in there, make sure that you stay in touch with your servicer, and also use the loan simulator at studentaid.gov to take a look at the options that you have available outside of income-driven repayment plans. Now, if you do have any prior periods of qualifying employment during a time when your undergraduate loans were in repayment, then we would also recommend that you submit a PSLF application so that you can get credit for those periods, and consider consolidation after that application returns and after you have received your first qualifying payment count. You can't consolidate right now anyway, but the reason why we suggested this is that if you had qualifying employment in periods of repayment on your undergraduate loans, your graduate school loans would be starting off basically with no history. And it could be beneficial to later consolidate those loans and put them on the same clock in terms of both repayment as well as public service loan forgiveness. It's not always the best thing to do, but it's good to explore the option. But we won't know that until we've seen that you actually have a qualifying payment count. If the undergrad loans have no history of repayment nor qualifying employment, then consolidation wouldn't be necessary because all the loans would enter repayment for the first time at the same time. So hang in there. And just like you were waiting to see this whole SAVE situation and federal injunction get a final resolution so we can all move forward. All right, let's take a look at the next question. Okay, this is about the FAFSA. I'm finally able to fill out my 24-25 FAFSA, and they're asking questions about my scholarships and grants, and they want me to review the information from my 1098-T. I've located the 1098-T online, but I'm still not sure what to put in this section. Do I just give them the total of my scholarships and grants? This is a great question. A 1098-T is a tax form that's generated usually from your school to you, and it shares with you information that you might need to report on your personal income tax return. So let's take a look at the background for this borrower and, for this student. and then we'll take a look at the answer. So this student received scholarships and grants that covered most of their tuition. They also received student loans that covered their additional costs. So let's go to the answer. Okay, so the FAFSA is asking you to report the amount of college grants, scholarships, or AmeriCorps benefits reported as income to the IRS. Since the grants and scholarships covered what's known as a qualified educational expense because they were for tuition, you would not have to report this as gross income to the IRS. For FAFSA purposes, you would report the answer to this question as $0. Sometimes, from my experience working in financial aid with students who get that 1098-T, sometimes they think that automatically they're going to have to pay taxes on something. The only situations where I've seen a tax actually kick in is when someone receives college grants or scholarships that were greater than the qualified educational expense amount. So if someone receives scholarship dollars in excess of what they had to pay for school, then that extra income was considered, in some cases, taxable income. So our recommendation here is to seek advice from the IRS. They have an interactive tax assistant that can walk you through a series of questions in case your situation changes. And the link is there. We'll make sure that we get it added to the comments in this video once it's annotated and uploaded to YouTube. All right, let's move on to our next question. That is, I recently completed my 2022 tax return. Should I complete the 24-25 FAFSA? And before we get to the answer for this question, I'm just going to give you all my blanket answer. If you are planning to attend school in any academic year, then my advice is to complete the FAFSA because the FAFSA really opens up the door to all types of aid: federal aid, state government aid, aid from your institution, aid that might be offered from private scholarship providers. The FAFSA is definitely worth completing because it can give you a lot of options, some of which never have to be repaid. So now let's take a look at the specific answer for this question. All right. Again, if I didn't say it clearly the first time, yes, you should complete your 24-25 FAFSA. There's something that you can do within the FAFSA to make it easier to provide that tax information. You can consent to provide that information. And the consent is mandatory for all contributors. If there's any issue with retrieving your tax information, the Office of Financial Aid at your institution will communicate with you. Keep in mind that this 24-25 FAFSA is different. So if you're experiencing issues with it, you are so not alone. And even though it's late September, there is still time to complete that FAFSA. So just make sure that you give your consent so that that information can be disclosed electronically, and you don't have to hopefully worry about trying to get paper documents and all that stuff. Just make the process easier on yourself, but definitely, absolutely complete the FAFSA. All right, let's move on to our next question. Okay. This is, I'm dropping out of college mid-semester. Am I on the hook to pay for the entire semester out of pocket? Or will the refund money and loan simply be given back to the government? This question relates to something called Return of Title IV. And in the financial aid community, you might hear this referred to as R2T4. So I'm going to give you a little bit of background on the situation, and then we're going to tell you more than you probably ever wanted to know about R2T4. So let's take a look at the background first. All right. So this student received about $5,500 in federal loans for the fall semester, and they also received a Pell Grant. Their refund hasn't been released yet, but the loans have been dispersed onto their account. So if they're looking at their bill for the semester, their classes have been paid for because the loans hit their student account, but the remaining funds, any excess, has not been sent to the student as a refund yet. All right, now let's take a look at the answer in all things R2T4. So your bill might still be due depending on your institution's policy for tuition refunds. Those policies are usually published online, or you can reach out to the office that's responsible for student billing. some campuses call that a different thing. It could be the bursar, student accounts, student accounting, student finance, student financial services. Basically, look at your bill, and that should point you in the right direction. And they can let you know what the policy is, but also where your withdrawal date falls within the provisions in that policy. So some schools, schools have a policy about this, and we're providing an example of a tuition refund policy. And it's usually linked to when you drop out of school. So if you drop out before classes begin, then 100% is refunded. You would not have to pay the bill. If you drop out up until 60% of the semester has been completed, they prorate things, and the refund is based on Title IV refund policy. If you were to drop out after 60% of the semester has passed by, there will be no refund. So that means you're responsible for paying. Your account will be reviewed by a process called R2T4 within 45 days of your withdrawal, and the amount owed will be determined. As for R2T4 and that calculation, honestly, that's not something that I've ever had to do. I know people who I had to ask, to do that, because unfortunately some students had to discontinue their studies. But as for asking me how it's done, we had to give you this text. So R2T4 is a calculation that's required when a recipient of Title IV financial aid withdraws from an institution during a payment period/period of enrollment in which the recipient began attendance. The calculation compares the amount of Title IV aid the recipient earned to the amount dispersed, and then determines whether funds must be returned or if the student is eligible for a post-withdrawal disbursement. So the core of this answer is you have to go back to your school. Your school is going to have a policy that's available for your review. They will look at the effective date of your withdrawal, and they'll be able to share, they'll be able to figure out that R2T4 calculation that lets you know how much of the bill you remain responsible for. All right, let's move on to the next question, which I believe is our last. Okay, this is about the FAFSA. I completed my FAFSA for the first time in a long time. What does it mean to have a negative SAI, and am I qualified for financial aid? So this is a pretty straightforward question. Let's go ahead to the answer. The SAI is the Student Aid Index. It's an index that's based on a formula, and the resulting number can range from negative 1,500 to a positive 999,999. The SAI is used by your school to determine how much financial support you may need. A negative SAI indicates that you have a higher level of financial need. So along with that SAI and other factors, you should be considered for need-based grants like the federal Pell Grant program. So having a negative SAI, it's not a bad thing. It's just an index that helps determine your level of need and your eligibility for certain types of awards, especially those that do not have to be repaid. So that was a pretty quick answer, and that was our last question. So we're going to move on to wrap things up just by sharing a resource with you from the state of Maryland. And it's a resource that we mentioned during this broadcast already, and that is the Student Loan Ombudsman for the state of Maryland. Again, the Student Loan Ombudsman for the state is housed within the Department of Labor, and the Ombudsman can assist student loan borrowers who are experiencing problems with their servicer, which may include failure by the servicer to communicate with a borrower, errors in crediting principal and interest payments, misapplied payments, inaccurate interest rate calculations, billing errors, loan consolidation or modification errors, and or inappropriate collection activity or tactics. So the Ombudsman is definitely there as a resource for Marylanders, and you want to make sure that you try first to work the problem out, work through it with your servicer. If you're finding that the solution is not coming and you've reached out, to them in good faith and tried to resolve it, but you're getting nowhere, this is when you call in these third parties to help advocate for you or to advance your concern. And the Student Loan Ombudsman in the state of Maryland is a great resource. You can visit them online through the state's Department of Labor, and we'll make sure that we add that link to the comments as well. All right, so that does it For this, the September 25th edition of Office Hours presented by the Maryland Center for Collegiate Financial Wellness, I want to thank you so much for joining me for this edition. If you have any questions, you can feel free to reach out to us on social media. You can reach out by tagging us at the MCCFW or go to our website, mccfw.org/contact, and you can submit your questions there. In terms of any questions that came in today, just checked Instagram. I did not see anything. I don't see anything coming from Facebook either. I want to give a quick nod to, looks like on Instagram at His Dime. I hope I'm pronouncing that right. But thank you for joining us. We appreciate you being here. Office Hours is presented twice each month online, and we annotate these episodes and add them to YouTube. So if you missed the live broadcast, please do go to our YouTube channel, like and subscribe. We are at the MCCFW on YouTube, and we are also at the MCCFW on X, Facebook, and Instagram. Before I wrap this episode up, I'm checking one more time to see if we have any comments or questions, and I don't see any at this time. I do want to share that the Maryland Center for Collegiate Financial Wellness is a 501c3 nonprofit organization, and much of the work that we've done has been made possible through gifts from people who believe in what we're doing. And we're so thankful for those gifts and for the impact that we've been able to make with those gifts. However, we don't have enough gifts to support providing free service to everyone who asks for our service. So in the month of October, we will be launching a fee-for-service option, and that would be so that borrowers can pay to meet with a student loan strategy coach and just get an inventory of their loans, review any eligibility for benefits, and get assistance with any applications that are available at that time. If you have been with us since the beginning, when we first started Office Hours in 2021, you know that my philosophy has been that borrowers should not have to pay for advice with student loans, and I still believe that. If the system worked the way that it should, borrowers should not have to pay for solid and strategic advice. But unfortunately, that type of advice just has not been provided consistently by those who are in charge of servicing. And I don't see that situation changing, at least not in the near term. So we're going to implement fee-for-service student loan strategy advising coming in October. For those of you who fall within the categories of our grant-funded projects, like educators in Prince George's County, those services will continue to be offered for free as long as the project dollars last. So things are changing, but we want to do this so that we can help as many people as possible. And our website will be updated with that fee-for-service option at mccfw.org in the coming days. I can't think of any other announcements at the time, and I'm double checking just to see if there are any comments or questions that have been unaddressed. And I think we're good. So just to wrap things up, thank you again for joining us for Office Hours. Please do stay in touch. Subscribe, like, follow on social media at the MCCFW. And we also have a monthly newsletter, the Collegiate Financial Wellness Connection, that you can subscribe to get more details about events and things that are happening across the state of Maryland, along with McFew's activities. So I think I've covered all the bases for today's edition. Thanks again for joining me. And as always, until next time, be well. Bye-bye.